Hey guys, so I wanted to do a trade breakdown on the EUR/USD trade that I just took. I put together a little checklist here that we can go through for the strategy. So number one, you can see is structure. So if we're looking at the current structure on the 4-hour, we can see that we have this bullish break structure. So obviously currently bullish. Now, point number two is the trend. So trend means that we obviously have the trending phase, which is just moving with the current trend, which is bullish. That means we're expecting further upside. And then we have the retracement phase, which means we're expecting a pullback. Now, the pullback obviously happens to at least 50%. That's just our first target. And of course, you can see point 3 is zone. So after 50% is reached, we can expect price to go to the nearest demand zone because obviously it needs to react off from something if it's going to continue to the upside again. So, oops, my zone disappeared, but we actually have two zones over here just below the 50%. So those would be our targets on the higher time frame. Now, step 4 is lower time frame alignment. So essentially what we can see here on the 4-hour is that we are currently in a bullish trend. However, we need to start seeing a retracement breaking the minor lows, targeting the 50% or discount pricing. And then we have two demand zones that price needs to pull back into before we have a bullish continuation. So those are all the reasons why I'm looking for shorts despite being in a bullish trend. So this is just a retracement trade, it's not counter trend because we have plenty of reasons why price is likely to come down. So if I move over to the 15-minute here, I'm just gonna delete the 4-hour analysis. We can see what we had is a break in minor structure. So the swing structure would be something more like this. Let me just quickly draw swing. So if we wanted to wait for swing structure, we'd have to wait for price to come all the way down to this level and then pull back and continue down. But based on the 4-hour, you can see that that 15-minute swing break would be all the way down here. We'd already be below the 50%. So it's likely that we might just miss the move. And that's why I use the footprint so that I don't have to wait for swing structure. I can get the footprint confirmation instead, which gives me still the high probability setups with strong enough confirmations. So that is why I'm happy to enter with just a minor break in structure. And then of course we have our demand zones. Now, what makes a demand? Let's just cover it quickly. We've got the gap right there. And what we can also see is sort of the liquidity over here that needs to be taken out above this wick. So it's always a good sign when you have liquidity just below the zone. But of course, for me, the final confirmation that I take for considering whether this is a strong supply zone or not is I need to look at the footprint. So if I open up the footprint over here, I'm looking at that same exact supply zone, and I haven't drawn it very well. It's like that. What I'm looking for is the most significant bullish delta within this candlestick. That will show me the precise level where buyers were entering in the market just before the sell-off. So we can see that here, 235, very significant buying level, and I marked it up. And I wait for price to come back to that level on the retest, and obviously it happens in the supply zone. And for my entry confirmation, all I'm looking for is a reaction on the zone and a delta shift. So you can see right here, we went from bullish delta to red delta or bearish delta, and I took the entry right on the candle close. So let me put that right there. The stop loss always goes at the last internal high. So this is where the supply zone started. The last internal high would be the previous one. I don't put it above the zone because you have, well, you can see there, you have a higher chance of being wicked out if you put it immediately above the zone. And then I target 1 to 3, and you can see, if we go back to the candlesticks, that during Asia, yes, we had some pretty nasty drawdown, but during Asia, we had that move to the downside and we woke up to a nice TP. So there you go. That's how you can take SMC trades using footprint confirmations. And yeah, it helps you get into moves earlier instead of waiting for swing structure. That's why I like to use this strategy. And yeah, I'll put my execution screenshots up as well, and I'll see you in the next video.